What is going on, everybody? It is February 11th, 2024. This is going to be the weekly forecast for the week ahead on NASDAQ. I'm going to go over dollar index yields, bonds, and maybe a little bit of Forex. Per usual with the weekly forecast, I advise all of you to do the same because you're going to get an overall perspective of the market and what price is trying to reach for, what's the relationships between all of them. This week, we have CPI on Tuesday. So something to really be aware of going into tomorrow, because typically before CPI, FOMC, NFP, all those major news event drivers, price can be held. It can potentially be in a small range tomorrow, especially on a Monday with no economic news driver events. That could potentially lead to a lower probability day because I'm looking at the whole week in the calendar and CPI is ahead of us. So I may not do anything tomorrow. I will be live streaming, but I may not engage with price until Tuesday. So be aware of that. We don't have anything on Thursday or on Wednesday. On Thursday, we have four red folders in the morning. And then Friday, we have 3 red folders as well. So pretty good lineup for the week. If I had to say myself, I like having a lot of volatility in the market. And just perspective wise, it would be nice for CPI and all these news event drivers to push things into sync. What I'm looking at here is I'm trying to gauge in this decoupled market what we're really trying to do. So again, like always last week, if you didn't follow the weekly forecast, I think I broke it down beautifully. And this is something that I'm paying attention to all the time, and I get questions about it basically every single day, which is fine. But if you're trying to learn, this is what you need to be doing. I don't care what anybody else says. I don't care what Twitter says. I don't care about anybody else's opinion because this comes straight from ICT himself. And this is what he's doing. He just doesn't mention it that often. He likes to leave breadcrumbs for those who are studious and actually pay attention to his content. He's doing this. He's watching all of this in real time. He has 8 monitors for a particular reason because he's watching the bond market, he's watching yields, he's watching dollar index, he's watching foreign exchange, and he's watching how these all intertwine with each other. I actually asked him a question over the weekend in our private group, how he was handling this decoupled market and how he was trading in the Robins. And he didn't give much to it, but he just confirmed to me that, yeah, we're in a decoupled market. He said I was approaching this very cautiously. And it just reconfirmed to me, if you watched me last week, I was very hesitant to do a lot of things. I didn't trade very often. I took 2 trades. Even the last 2 weeks, I haven't done much. And most of you, you see that and you believe that that's a wrong way of approaching. And I'm not saying that particularly to dig at you. I'm just saying because if you're not used to this, if you don't have the idea that not trading even every single day or not even trading every single week, not having that huge urge to push price when things are decoupled, to me, that's such a superpower. It's something that I wish somebody else taught me. And I tweeted about this on Friday, how if you understand from a more experienced standpoint, which I'm trying to give you is I'm okay not engaging that often during these decoupled moments because I know when the low-hanging fruit, easy conditions come, I'm going to be able to maximize as much as I possibly can during those periods. And it's going to make up for all of that time that I was being patient. I didn't take very trades. I was being very diligent. Those are the most rewarding times when you can finally see, okay, it's fine to be patient. It's fine to sit on the sidelines and do nothing. Most of you can't see that. You want to press, go hard every single day. Then you end up losing. You end up going, okay, well, why am I in a tailspin? You're pressing in unfavorable, low probability conditions, and you wonder why you're unprofitable. So when you see somebody like me, who is being very patient, who's not trying to push in low probability conditions, you may ask yourself, well, does he really know what he's doing? He's really not engaged in with price. I thought we're supposed to be, trading every single day. There's 15-second models, and 30-second. No, that's not, to me, how you're going to be a successful profitable trader. And I'm sorry. If you don't align with that, then obviously I'm not the right mentor for you. And obviously I'm not the person you should be listening to. But if you are aligning with what I'm saying, you're resonating with it, then you're in the right place. So I had to get that off my chest because I've gotten so many comments and questions over this. And it's so important. We're in a very good time to learn. It's a very good time to understand what is really going on in terms of intermarket relationships, when to sit still, when not to press price, super hard. And once those times come when it's super easy, low-hanging fruit conditions, you're going to see, man, I know exactly what he's talking about now. I can just wait for price to open up like this, and I can maximize, and I can push actually pretty hard in these conditions. I can pyramid, I can double down. If the right things align, that's what I'm doing. So enough with that. This is bonds monthly time frame in here. Again, last week we had a lower bearish closure, and I've been annotating how we've been getting lower prices on bonds. And bonds are inverse correlation to dollar index and to the index market. Or the index market should be in correlation with this. This is inverse to dollar index. I apologize. So on the daily time frame, we're drifting off lower in here. And to me, if we were really going to continue higher, it should have already supported it. Looking even at the 10-year note, again, we're drifting off lower. We've had weekly bearish closures basically every single week for the last several weeks. Bonds or yields, you can see we're closing off higher. So this is what I mean by things are just decoupled. I can't favor something very high probability, because if bonds are moving lower, yields are moving higher, and dollar index is moving higher, it makes it difficult, especially with index futures at being at all-time highs, it makes it difficult to want to keep pressing it. So you have to be aware of these conditions. You have to be aware of what's going on, and not just blindly getting into the market. On dollar index again in here, if this starts to move off lower, I would actually prefer it, to be honest, at this point, because that would at least align with index futures. At least they're moving off higher, and dollar index would move lower. And hopefully bonds and yields get into sync with it. But again, I'm not certain on dollar index just yet. I think it's 50-50 to me still. We rallied up into this weekly premium for value gap last week, and we had a kind of a weird closure. So to me, I'm trying to see what this week will look like. Because if dollar index moves off higher, then you have to be aware of the idea that index futures could possibly move lower. And looking even at daily time frame in here, we have the premium SIBI, which is resting above price. We have a very large portion open. This inefficiency here with the down close candle would be the last point of interest. I really wouldn't want to see it trade. I wouldn't even want to see a bodily closure closing within even this wick. So it can wick down into it, but if it closes within basically this range here, it's not a particularly great sign if it's going to maintain bullishness. I preferably don't really care what it does. If I had an opinion and I wanted to do something, I would like it to go higher, because that would align with everything else I'm looking at. But I don't have control over it, and I just have to adjust to what it's trying to do. So on the bearish perspective and the analysis is we've taken out buy side liquidity here. We rallied up into premium, weekly fair value gap, the daily fair value gap again. On the bullish side, we could dip down into the fair value gap there and bullish order block and expand higher. So you have to keep that perspective. If this thing just bleeds through both of these bullish PD rays, then to me it's very clear that we're going to want to attack the sell side there and travel lower. So we'll have to see what happens with CPI. I think that's going to be an easy determination on what dollar index wants to do. And it's going to make things clear for me on what NQ would want to do and the other index futures. Technically, if I'm not using intermarket relationships on NQ, I don't see this thing going lower. So I would honestly prefer dollar index goes lower, because I would agree with this just continuing higher. Being at all-time highs again, it makes things uncertain. I really don't know where price wants to go, and that's just me being truthful. I mean, if you're looking at a weekly perspective and getting kind of standard deviations, you could do this inverse swing here. This is the last impulse leg up. This is the reason why I'm using this inverse swing. When you have a negative 0.5, you have a -1 there. So I'm not a huge fan, as you all know, I'm not a huge fan of standard deviations. I think they're just an area for price to potentially seek into. But if there's buy side over here, something I could look at, then it would be a little bit easier. But since we're at all-time highs, then I just have to use standard deviations. So if we continue upside, we could look for 18,560. Daily time frame in here. Again, there's just nothing much to work with. We're just continuously pressing higher. You saw on Friday, we closed out the week extremely bullish. No momentum to the downside. And with YM as well in real time, a lot of these sessions, YM is completely decoupled away from ES, and even ES is decoupled away from NQ. So it's been difficult in real time to trade all of this. That's the reason why I'm just sitting still. I'm not doing much. It may seem boring. It's like, man, you should be engaging with the market all the time. You should be doing something. That's not my particular style, and I don't find that a very profitable or reasonable decision to be making. Again, that's my personal opinion. But over the years, again, 6 years of experience has taught me sitting still is probably the better option than trying to press in something that I'm uncertain about. So we have a small inefficiency. I'm just marking up all the bullish PD arrays we're respecting. I don't see this thing moving lower currently. Intermarket relationships right now, they do tell me that. And that's the reason why I've been kind of fighting the idea of just continuously pressing this higher. So they're not in agreement. So dollar index is not in agreement with this going higher. Neither is bonds, neither is yields. So, and when YM is completely decoupled during the session, it makes me hesitant to do anything. And it makes me hesitant to want to keep pushing this higher. So I hope that's clear. I hope that I'm making it clear enough why I'm quite hesitant to do a lot of things in this current market. And I'm not fearful of missing out on moves or sitting on the sidelines, because I know when things are in favor and they do align, it's super easy for me to interact with the market. And all of that time that was spent, watching price, waiting, doing nothing, it will all be made back very easily. And I can't wait to show that to all of you and be like, this is exactly what I was talking about for the last several weeks, is once we move into favorable conditions and things are agreeing, you're going to see just easy salad days, just money pouring in basically every single day. And I can't wait to show that, because I know what my system does. I know what to wait for. And if you follow the rules and what I'm saying, it's going to reward you. You just have to be patient. Anybody that says that you can trade every single day, you can make money every single day, and you should be able to trade in every single condition, they're talking out of their ass. They have no idea what they're talking about. They don't show you their P&L. They don't show you a track record. So don't believe them. This is, again, I'm just going through the areas. I don't really see anything in terms of what I'd be looking for. I need more information. All I have is this 4-hour inefficiency to work with and the previous Friday's high. So we'll have to see what market looks like by tomorrow. I may not touch it tomorrow going into CPI. ES, we finally created a all-time high in here. We got above this buy-side liquidity pool. Again, all the indexes to me, I don't see a turning point right now. At least I don't want to call top. I don't see this thing just dropping off lower from here. So again, it doesn't really agree with dollar index. And these actually may be the real leader. And it just may be waiting for dollar index. This thing could drop off lower, yields would move lower, and bonds would move higher. And if that happens, then it would be super easy to just continuously look for longs on index futures. And that's another reason why I'm utilizing intermarket relationships, because we're at all-time highs, right? When you're at all-time highs, I don't have anything else to seek in terms of liquidity or inefficiency. So I have to rely and lean on intermarket relationships to give me that confirmation that, okay, price should maintain higher prices, or is it going to reverse and go lower? British pound, I'm not really going to go over this, but we have a lot of buy side above price here. A lot of buy side. We dropped down last week, taking out sell side liquidity in here. So it may want to reverse, take out buy side. As far as, I don't have EU. Again, EU, bearish order block here. If dollar index moves higher, then euro is going to drop off lower, and same with pound. So keep a watch on this. I don't particularly see euro moving higher, and that would mean that dollar index would move lower. So again, I'm utilizing euro as another confirmation with dollar index. So if euro, to me, looks like it's pretty bearish, then dollar would maintain upside. I don't see a reason for euro just to reverse out of here. We've disrespected all of these bullish PD arrays. We're respecting bearish PD arrays and continuously seeking sell side. So to me, euro is going to want to seek lower prices. And if that happens, the dollar index is going to move higher. What does that mean for index futures NQ, ES, YM? That means that would potentially reverse and go lower. So do you see the correlation here when I'm trying to draw a conclusion to, towards? That's probably going to be it for this video. I know I went on a tangent a few times. I apologize, but there's things that need to be said. It's things that you need to hear, right? Not stuff that you want to hear. So that's going to be it for this video today, and I will be live streaming tomorrow, 15 minutes before the open. Till then, good luck and good trading, everybody. Be safe.